Investing and fishing certainly has some commonalities. It's not only knowing about how to fish, it's about knowing where to fish, because if you can find the right types of situations, the right spots, it can be like shooting fish in a barrel. That's a comment that Charlie Munger had previously said. And for me personally, I find those situations where it's above average odds for investors is it with financial toll booth type of business models where you have recurring revenue, merchants that are very sticky, and where they benefit from inflation over time because it's effectively passed through as a revenue. It's passed through as an expense for the customers. And you can see this with several companies that have created immense value over time. Personally, on my investment journey, I own Audion shares. It's up well over 100% since I called it out. And I previously owned Fiserv as well. I no longer own shares of Fiserv, but I also did call that out to my subscribers. And during my time that I held it, it was up around 100% as well. So this is type of situation. This is a type of pool where fishing, I think, generally can have above average odds. So this gets me to Global Payments, a stock that is also a financial toll booth that has absolutely lost a lot of shareholders, a lot of money over the last 5 years, where the underlying business has held up, but the stock price has not. And that's the type of situation that gets me interested. When you have a contraction of over 50% in 5 years, while underlying free cash flow keeps going higher, that means sentiment has absolutely collapsed. Now, in some cases, it's warranted, and we'll talk about that in this video, talk about Global Payments, GPN. And when we look at the business, it's you could really think of it as historically two different segments, merchant solutions and issuer solutions. One is about enabling companies to issue credit cards and powering them, enabling them to easily transact. The other is enabling merchants to accept payments and getting the fees tied to every time a merchant has a transaction. Now, this is going through a radical change. However, when you look at their merchant business, you could see it's powering millions of merchants and tens of billions of annual transactions. This is a huge company, enabling a lot of commerce. And their revenue has grown not only organically, but through dozens of acquisitions in the past decade. And you can see from around $1 billion to several $1 billion in revenue. The fundamental transformation that's going on that management has announced in the last few months is that they're actually divesting their issuer solutions segment to simplify the business and focus more on their merchant acquisition, merchant acquirer business. And they're also acquiring WorldPay. So this is effectively doubling down on their merchant solutions segment. It creates a global pure commerce solutions provider. And by leveraging WorldPay with Global Payments, they will now have an expanded e-commerce enterprise and integrated capabilities to satisfy merchants around the world. And so this is a very interesting and developing situation. There's a lot of moving pieces as we look at the transaction because they're divesting their issuer solution segment to Fidelity Information for cash, and Fidelity also owned a stake in WorldPay, I believe around a 45% stake. And they're also acquiring, Global Payments is also acquiring around a 55% stake in WorldPay. So they're buying all of WorldPay from two different parties, one of which is a private equity firm, where they're effectively paying them both cash and stock, and they're issuing stock at around $97 relative to the current share price around $79. That actually looks like a pretty good deal, but it does mean that there's a private equity player that's now going to own around 15% of Global Payments. What I do like to see is that the first year of this acquisition, it is expected to be accretive, meaning increasing their earnings and expecting to increase at a mid to high single digit rate thereafter. However, there is a warning that there's going to be a lot of debt with this situation, around 3.5 times at close, maybe a little bit higher if you remove some of their synergies. They do expect a lot of benefits from this acquisition, some synergies where the cost synergies are at least $600 million and revenue could be at least $200 million. I generally ignore revenue synergies and generally focus on cost synergies as the most likely that can be stripped out. And the deal is expected to close, all these different moving pieces in the first half of 2026. So this is not a 2025 development, but one should think of it as 2026, 2027 sort of framework of how this transformation plays out for Global Payments. And it is a big deal because you're going to see adjusted revenue go from around $7 billion for Global Payments to around $12.5 billion. You're going to see EBITDA go from around $4 billion to $6.5 billion. Transaction volume from $1 trillion to $4 trillion. So a big change. This is a transformative deal for Global Payments. A lot of debt. Yes, but they are saying We're expecting 2026, 2027, if this was just Global Payments as a standalone, to be looking at mid to high single digits revenue growth. Whereas with WorldPay, we're probably talking about high end of that range. So talking about maybe 7 to 10% type of growth, maybe 7, 9%. And their free cash flow around $3 billion in 2026 and 2027. Whereas that would be standalone, ignoring, their issuer segment. Whereas looking at Global Payment plus WorldPay, probably talking around $4 billion plus in free cash flow over time. So this is a business that they expect can generate either way, $3 billion, $4 billion, a lot of free cash flow over time for investors to think about. So what are my thoughts about Global Payment looking at this, business? Because generally I like these type of financial toll booths. So as always, this is not financial advice. And full disclosure, at the time of this video publication, I own shares in Adyen and Shift4 Payments. Those are both financial toll booth types of companies. Also, quick plug, this past week, Anil Y, this weekend, he upgraded to a premium unrivaled subscription and wrote, "I've immensely benefited from all your invaluable ideas and news thus far and looking forward to more in the coming days." This follows Kieran D, who said, "Gave this service a try and was very impressed. Been investing 5 years now and haven't found anything comparable to what you're providing." He's talking about Unrivaled Investing. If you're looking to learn more, come check out Unrivaled Investing. So when I think about Global Payments, and I think about any prospective investment, I run it through a very straightforward checklist that, frankly, removes 90% plus of the companies. In this video, I'm going to focus primarily on these two elements, compelling valuation and obvious growth potential, as we think about Global Payments. So from a compelling valuation perspective, around $79 per share, I'm using an adjusted share count that reflects the shares to be issued with this acquisition. So that all in gets to around a $23 billion market cap. I find this to be quite interesting because if you look at the free cash flow the company's historically generated, giving really no credit for, this acquisition. However, you do have the issuer segment that's going away. So, mixed picture. But overall, looking at their free cash flow historically, talking about, let's say $3 billion, $3.5 billion in 2024, $2 billion in 2023. So you're talking about a business that's trading at 6 to 10 times free cash flow. Management talked about, as I just called out, around $3 to $4 billion plus in free cash flow. So let's say pro forma, this acquisition goes through, management delivers somewhat on what they said. The high case is giving management credit, arguably not even full credit because management thinks they could do over $4 billion in free cash flow. And the low and base doesn't really give management full marks. It's saying $3.5 billion to $3.8. So the transformative, sale of issuer and purchase of WorldPay really just ends up where they were in 2024 of around $3.5 plus billion in free cash flow in my low and base scenarios. And let's also assume very low growth in the years ahead and low earnings multiple. And we'll talk about that in just a second. And overall, this framework, once again, it's hypothetical, stock price go higher or lower, does get the type of output than what I'm looking for. This is exactly what I'm looking for when I'm looking for a compelling valuation. And in this case, the low case, the free cash flow, I'm assuming only about 25% can go to shareholders. I'm assuming the rest goes to debt repayment and mergers and acquisitions. So a lot of free cash flow going to elsewhere other than shareholders. So it's a very low multiple, 6 times ballpark free cash flow. And in my low scenario, even arguably fairly draconian assumptions, no growth, 8 times earnings multiple, the 25% of free cash flow going to shareholders, you're still able to get sort of an 8% annualized return, which I'd argue, once again, this is hypothetical, that's a very reasonable, compelling sort of low side, whereas the high side, you're talking about several 100% type of upside. So I like that symmetry. These are the types of situations where I want to, I'm often considering before I pull the trigger, I want to see that sort of asymmetry where the low side that I think is very likely to be delivered, I can still pencil out 40 to 50% type of upside. And the high, if things go really well, you're talking about several 100%. So I think this is the type of situation that deep value investors like Michael Burry might be interested in, because he's the guy, routinely buys companies at like 6 times free cash flow, but they have a lot of debt or even lower. And that's where you are here with Global Payments. You have a company around 6 times free cash flow, a lot of debt that they're going to need to repay. And if the business is just flat over the next few years at 6 times free cash flow, there's a lot of potential that that cash flow can get returned to you as a shareholder over time, or they just repay debt, or there's valuation expansion, multiple expansion. If you go from 6 times to 12 times, now you've doubled the price. And it's still arguably half the valuation of where the S&P trades. So there's a lot of potential. This is why deep value investors love these types of setups. So I could easily see, it would not surprise me if we saw someone like Michael Burry disclose for the second quarter that he was purchasing Global Payments. I have no insight onto this. This video was based on a customer request from who's a member of the Unrivaled Investing community. And so from a compelling valuation perspective, I'd say this stands out. So it passes. But the part that's harder to sort of digest is there obvious growth in the future? For example, if you look at their first quarter results for Merchant Solutions, their revenue actually was flat, declined slightly. So it's a very mixed picture. Like you might ask yourself, well, is this a, some sort of value trap because of how cheap it is? Is there something where the business is going to shrink faster than shareholders can get either the cash flow or the valuation expands? And so I'd say the answer is it's a mixed picture. They're clearly losing market share to more competitive merchant acquirers. That includes niche providers like Toast and Shift4 and Clover. Clover is owned by Fiserv. They've been growing the Clover brand very quickly. Toast and Shift4, they've been growing 20 to 30%. Toast is more organic based, acquiring restaurants that then leverage the Toast payment solutions. So I look at this and think the market's not growing at 1% or flat. The market's growing at least a couple percent. And so for them to say, yeah, results were 1%, and if you do a bunch of adjustments, we're closer to 6%, including currency and divestitures, it rubs me the wrong way. So I view this as a very serious red flag that their existing global payment solution is losing market share. They're not only losing share to the niche providers, but they're also losing share to the lower cost solutions like Adyen and Stripe, which are focused on let's push the costs as low as possible across e-commerce, across point of sale, across omnichannel. And so you have these different, one is more of a software push saying we're effectively your operating system. That's a key part of Toast or Shift4. We are your operating system for this type of business, and we specialize in this type of business. Global Payments is behemoth, and they haven't been able to really find some sort of edge to say, yes, we're going to take back share. At least so far, you're not seeing that in the results. So that's a key aspect for investors to consider. However, the WorldPay acquisition might change things a bit. It's unclear exactly how much it'll change because WorldPay, it's a private company. And so management is talking about accelerating their revenue to, let's say, 7 to 9% per year. Now, that could suggest that WorldPay is holding their market share. And, while Global Payments legacy might be losing, WorldPay can go sort of get them into position where at least they're stable over time. My view personally is the way to find these types of multi-baggers that generate hundreds or thousands of percent types of returns over time, it's easier when you have that sort of obvious growth potential and you have a compelling valuation. That's how you get the crazy sort of upside return over time, because you have valuation expand and you have that great growth. In this case, I don't think you have that development. You don't have the great growth and the valuation expansion, but I do think you have enough free cash flow plus potential for valuation to expand that shareholders can get an attractive return in the years ahead. I don't think Global Payments is going to be right for my own personal investment journey, but when I look at it today, based on the fact that I don't think it's a value trap, at least now, based on their results, a value trap in my mind would reflect revenues shrinking in a noticeable way, let's say 3 to 5%, and the market growing. When you see that sort of situation, then you're like, okay, you're a melting ice cube and you have a ton of debt. This is going to go down further. If they can indeed post revenue growth like management is targeting and get to $3 to $4 billion plus in free cash flow, I think it wouldn't surprise me to see this as a $100, possibly $200 type of stock in the future, just given that amount of free cash flow. Now, once again, I think this is the type of stock that's very fitting for that deep value investor that likes to play for that sort of valuation re-rating. So it really depends on your own investment journey when you're looking at a company like Global Payments. Are you the type of investor that wants to constantly turn over rocks and say, I'm going to hold it from when it's dirt cheap to reasonably valued, and then I'm going to have to sell, have the taxes, and then go find something else that's dirt cheap and then do this rinse and repeat? Or are you the type of investor, and I'm not saying you have to pick either or, every investor figures out their own journey. Some people do a little bit of both. Or are you the type of investor that says, I want to find these great companies, buy at a fair price, maybe buy at a cheap price, and then even if it gets to fair, even if it gets too expensive, I'm going to keep holding on to it because I think it can keep compounding year after year, not only with their free cash flow, but with their growth, because they have a right to win. They have a right to take market share. I don't see that. I don't see a clear green light from Global Payments or WorldPay. I'd like to see more data that suggests WorldPay could win share versus Adyen or Stripe. I'm not seeing that. So I think investors here, need to first figure out, where are they on their investment journey? Are they looking for the deep value and looking to, play for that multiple expansion? Or are they looking for great companies that they just want to hold forever or for very long periods? I hope this video talking about Global Payments, sort of a case study, thinking about deep value investing and thinking about how to, where to fish and thinking about this framework, has been helpful for you. Thanks so much for watching Unrivaled Investing.